Hi everyone, thanks for joining us today and giving up a bit of your lunchtime. We're going to be talking about how to get your ESG strategy aligned with investor requirements today. So Adam and I, who are the co-founders of Positive Planet, are going to be running through some of our insights and giving you some understanding of what you need to do and what steps you need to take to align with their requirements. So a little bit of housekeeping before we start. If you can unmute your device before joining so you can hear us speak. If you do have any questions, if you just drop them into the chat and then we'll pick them up as we go along, and happy to answer any of those at the end. Session is being recorded and we will share this with anybody who's signed up after the event. And please just be respectful of anybody who's attending or speaking today in any of your comments. So we're going to get started straight away. Quick introduction to us. I suppose without going through all the detail, 3 things to note about Positive Planet. First one is we are an impact consultancy, and that means we're focused on making a difference. That's our reason for existing. And a credible ESG strategy for us needs to demonstrate that your actions are delivering meaningful and measurable improvement, not just for you and your company, but for your community, for your environment, and importantly, if you're looking at investment for your shareholders as well. Number 2, sort of getting investment ready is something that we do quite a lot. We support a large proportion of our clients with it. And we also work with quite a few private equity companies as well, who we support to define not just their own ESG goals, but those of their portfolio companies as well. Third thing is we are a small business as well. And so we do understand your challenges, and that means that we believe in business being a force for good, but we also know that your investment in ESG needs to be balanced with a tangible return on investment as well. So you want to get something back for what you spent. A little bit about myself and Adam, quick intro for me, and then I'll let Adam tell you a little bit about himself. Adam and I set up Positive Planet in 2021. I'd spent about 5 years working in the sustainability and renewable energy sector consulting before that. And prior to that, I had about 15 years in sales and marketing roles in telecoms. And I won't tell you how much further back we go. Before that, I've obviously got my filter on to try and make me look as good as possible. Second thing about me is I spend most of my time running the company these days, less time with clients. But I do work directly with clients as either a board advisor or on things like strategy design and implementation as well. So possible that if you were to work with us on your ESG strategy, I may be engaged in some of those early parts, helping you to design that strategy, and may support you to ensure that you're delivering that impact and getting your return investment. Third bit is Adam and I haven't done one of these for how long, Adam? It's been quite some time, isn't it? I think it's at least 2 years. So
yeah, I think you're right.
Yeah, element of trepidation from both of us here, and I think we're as nervous as we are excited in this. And as a result, we're both prepared really well to make sure it doesn't go wrong. So hopefully it's as good as we intend it to be. Adam, do you want to give a quick introduction yourself?
Yeah, absolutely. Good afternoon, everybody. As you can see, Adam White. I guess prior to Positive Planet, I was founder of a energy renewables business. Very interested in sustainability in sort of many aspects of it. Spend most of my time now in some kind of sort of technology or automation parts of the business, but much like Stephen, also advise with some clients, partners on sustainability and strategy.
Thanks, Adam. I'm just going to give a quick intro as to sort of why, I suppose, the ESG matters to investors, and just give you a sense of some of that. And we pulled some data from a PwC report that came out in 2023. I've seen something else this morning which really backs up these stats. I'm having a conversation with somebody from a corporate financial advisory this morning who said, actually, this really hasn't changed very much in the last few years, despite things like the political landscape, certainly in the US, changing a little bit. So it's a big focus for nearly all investors. And the stats show that about 95% are focused on ESG criteria, and they include ESG assessment as either part of their pre-deal due diligence process, it's included in the valuation process, and an expectation that it'll be part of some sort of ongoing reporting requirements for you. ESG, it isn't optional anymore. It's become a real necessity, especially if you're looking for investment. And the choice that you have really in this is, do you treat this as a compliance activity and therefore a cost, or do you want to treat it as a means of driving up enterprise value, which then subsequently delivers a return on your investment? So just thinking about those benefits to you as an organization and what they might be. And we've listed 6 things here that either PwC listed or things that we see ourselves. And according to the PwC report, ESG done well gives you a 10% higher chance of getting a better valuation in the process. But if it's done badly or not at all, you're 10% likely to see a reduced valuation as well. So it matters in that enterprise value and that shareholder valuation. ESG isn't just about compliance. It's about demonstrating that you're a well-run business that understands and mitigates risks. And that reduces the perceived risk for investors as well. So it helps them be a bit more confident in investing in a business and demonstrates that you are just a well-run organization. An increased amount of investor capital is being linked now to ESG related impacts. So if you can't demonstrate that you've got a solid ESG strategy in place, it is going to reduce the pool of investors and therefore your access to funding if you don't have a good ESG story to tell. And that, I think this is a really important thing. It's about how you articulate what you're doing as well, not just doing something. So it's being able to demonstrate that why you do it. And this is one of the, if we talk to investors about what they want to see from an ESG strategy within an organization, they want to see how it delivers value. They're not bothered about it being a compliance-led activity and a box checking. They want to see how you're integrating this into your business and how it delivers value for your business as well. Next 3 things. Well, a well-designed and implemented ESG strategy will deliver positive results to your profitability through both reduced costs, reduced waste, and things like lower employee churn. So it's about that efficiency and cost saving. And again, it comes back just to showing you a well-run business. We regularly see a very high return on investment against ESG related activity. We've got a client that in the construction sector who's just seen an in excess of 1,000 times return on investment. And it sounds like huge numbers, but if you're in a bid management process, you're looking to win new clients, win new business from your existing clients, retain those clients. ESG criteria are becoming really important. And we did a webinar last week. You can access and download that, or sorry, a couple of weeks back I did with Emma, which was showing about that bid management process and some of the return on investment you can get. So there's huge value to be had from your ESG related activity and huge return investment. So and then one of the things that we've covered earlier is just that a well-executed ESG strategy will help you get that better valuation and widen the pool of investors that are interested in you as an organization. So it's a kind of why not, really. So Adam, what do investors look for rather when assessing a company's ESG credentials?
Thanks, Stephen. Let's sort of to continue on that and to have a look into those different activities that we can get involved in. We're going to sort of cover a number of those from different angles now. So we're going to look at things like what investors look for, what this investment-ready ESG means, how to build a strategy and strengthen disclosures. That is, sort of turning your ESG data into an investment story, given that this is relative to investment, but ultimately into a story for any stakeholder is important. And then how we get a competitive advantage from sort of something that might historically or even currently for some organizations be considered a compliance. Yes, please. Sorry. As we look into then what investors look for, we're looking at from an ESG credentials perspective. Some of this is focused on the basics, really, things like emissions reporting and carbon reduction planning. Obviously, in the environmental part of your ESG, but even with when we're looking at that and those sort of relatively basic parts of the process, we need to be sure that those are completed correctly to a high standard, including good quality data, and that we've got a very well considered reduction or net zero plan aligned to that. As we sort of step beyond those basics, investors are then looking at how how that would align with market standards and frameworks across your industry or business size, or geographic region, either where you're based or where you're selling into. So those kinds of things all then start to sort of become important. And all of that really is sort of looking at it's still at the E of environmental. And beyond that, the considerations of governance, accountability, and obviously social impact are huge. The next one. When we're considering this sort of what is investment ready ESG, or what does that mean? It's about bringing together the sort of the quantifying, the measurement elements, as well as planning and then disclosures or communication across each of those, those three pillars, in such a way that makes it clear and transparent, not just for investors, given that they're the topic of this particular webinar, but for all stakeholders. So it's easy to understand where you are in your journey, or where you are in your ESG maturity, if you like. And not just the things that have been done, but what's yet to be done and where those improvements could come from. You're likely to have heard, sort of before this idea of progress, not perfection, and I'm sure even I'll mention it again over the next couple of slides. It's because it really is where things are at. It's about having a plan and understanding where the gaps are and moving towards them. But all stakeholders, investors included, but also employees, customers, suppliers, etc., are looking for action and progress, and not expecting to see something that is that's sort of complete or done, if you like, and that ESG will always be, there'll always be space to evolve, things to do, impact to improve upon, as and those, I think that really sort of is the key thing. Is it really is about constant progress. The next one. When we start looking at sort of strategies for your disclosures, where really what we're looking at is to aim to something that matches the tone and content to your audience. So again, here we're talking about investors, but as I've just mentioned, we've got other stakeholders, and so making sure that we're matching what we know, the way we're communicating, and those things that we're communicating with that audience. It all sort of anchors back from ultimately the same sort of evidenced data set and the same sort of planning and activity, but being clear to the audience of that data is important, and making sure you've got good alignment. The sort of transparency and clarity in what is included in that particular disclosure, and also what isn't. Being able to show gaps is valuable, and very important, and also is the sort of the ability to express where you've overachieved or over delivered, but equally where we've underachieved. And I think sort of not shying away from the bits that didn't necessarily go to plan is a real sort of valuable part of that process, that adds real value to the bits that did, because as I say, this isn't something that we're going to sort of create a plan and execute and it's going to be perfect from start to finish. But when it does come to details, we need to be able to back up these the things that we're communicating, behind any kind of communication or disclosure with those details, and I think it's also important to make sure that you extend your brand tone into any ESG disclosures, and striking that balance between the sort of the compliance element of what you're sharing and the type of data it is, but also showing that it's part of what you do every day, and it's not an afterthought or an add-on to your typical operation. The next one soon. Thank you. So when it comes to sort of turning that data that we've collected, measured and quantified into some kind of story, again, we're not looking for perfection. So this is about being grounded in data and forward facing, and really looking to how do we sort of share that impact. So the use of an impact report to bring sort of to life those goals and objectives, that ESG maturity, to share those gaps and opportunities, and ultimately to highlight those sort of areas of risk. That impact report really helps to do that. It's all too easy to focus on sort of a negative approach when you're looking at any kind of process or journey where there's you're part way through and there's many steps yet to be taken. But I think this is the time sort of to get behind that plan and sort of share the opportunity, that an identified risk and something that's been put in place to mitigate that, or to be passionate about how we could take advantage from some of these activities that are being planned. So the kinds of things like how we might reduce supply chain risk from climate events by understanding and quantifying that your supply chain, or how maybe an upcoming product carbon footprint, for example, could give you a competitive advantage. Those kinds of things where things are ahead of us, but using them and making sure that we're understanding and quantifying the positive impact to the organisation, either in the reduction of risk or the creation of new opportunity for the organisation. But there's always lots of positives to come out of it, and I think correctly shared, as Stephen said earlier, doing it correctly, getting it right, from a sort of a process and communication perspective is very powerful from a business value perspective. And the next one, thank you. So considering that, moving sort of shifting through from maybe initially this is, the sort of the ESG is viewed as a compliance process, and then how do we sort of move that towards a competitive advantage? We'll all have been guilty of sort of box ticking at different times on different kinds of projects and different things. And it's easy for your ESG to be sort of put into that, labelled as around the organisation as sort of another job to do, and being kept separate from the rest of the business's plans and strategy and communication, I think. So we really need to sort of stop considering your ESG strategy as separate, and really get it consider it as being embedded as part of your overall business strategy, which can then lead into, again, some of the bits I've just mentioned, but leading into your product development, your pricing strategy, your market positioning, all of that will be influenced by your ESG strategy, and it really needs to be embedded in one and the same thing. When you can clearly demonstrate that your ESG strategy is reducing risk from climate events or from policy changes, that you've got a solid plan, good, your own good policies and procedures in place, all of this becomes an operational advantage. And ultimately, with many clients, we can clearly attribute, as Stephen mentioned, sort of business growth off the back of their solid ESG activity. So if you currently consider your ESG or your sustainability budget effectively to be a cost, and it's really focused on retrospective reporting and not forward planning, then something isn't quite right. It really needs to be considered as an investment, and therefore we should be considering what's the return on that investment. What are we going to see out of this over the next 1, 2, 3, maybe 4 or 5 years, and really sort of investing in it and planning for that return. And the next one, Stephen. Thanks. There's a few sort of examples of some of the competitive advantages here that are spread over 2 slides, but just to sort of again try and bring to life some of these examples. But in this first example, as you can see from a sort of sales enablement perspective, where we can meet buyer sort of codes and requirements, then we can put a pack together that answers those questions time and again, and means that we don't waste time answering them for every sort of customer, and so we've got smoother due diligence processes. We get invited into more quotes. We'll have faster onboarding. We'll be on supplier preferred lists, and ultimately we'll see reduction in as I say, sort of time to onboard with suppliers, and the number of questionnaires that either need for completing at all, or and at very most sort of, or very least, the success rate of those questionnaires where we sort of get approved, and probably get approved first time. So sort of there's a lot of time and effort benefits from having these sort of these things in place, and having a good pack to deliver and one work from. When we're considering cost reduction, cutting waste and utilities as an example, obviously reducing cost, so straight to the bottom line. That frees up therefore margin to advance to sort of use in maybe tweaks to your pricing models, or to reinvest in growth. It just these things, as small as they are, as they multiply up beyond just these couple of examples, starts to really add value to the organisation. So we might see reduced consumption of energy, or sort of creation of waste, less travel, again sort of less time travelling, less cost of travel, etc. For sort of skipping on to the sort of what we'll see from that. So we'd see reduced kilowatt hours and reduced CO2 per pound of revenue. So you yourself are a more efficient and lower impact organisation, which sort of then feeds back into your attractiveness to your customers, as your emissions are sort of passed on to them as part of their supply chain. So there's real value in that cost reduction piece. And we'll all have our own examples of investing in people and culture, but it's no surprise that good solid engagement with employees, for example, boost retention rate, boost productivity, reduces time and cost of recruitment. There's so many benefits can be seen from that are not shocks at all. The next one, thanks, Stephen. Thanks. The two on here are looking at risk and sort of finance. So risk and resilience in here. So sort of that supply chain piece, I think, is a good example here. So mapping the supply chain, anticipating sort of any impacts or challenges in that process. Considering compliance and operational risk gives us more reliable delivery, a stronger audit performance. We may see sort of fewer incidents, fewer delays to clients through supply chain sort of challenges and risks, better audit outcomes, ultimately seeing happier clients, maybe stronger brand recall, and sort of less time to recover from any of those sort of risks and incidents that may have happened otherwise. And the last example here, sort of clear controls, good quality data, good sort of disclosures will reduce that perceived risk. I mean, real risk, but also perceived risk for underwriters, lenders, investors. So we may see reduced costs on premiums, faster credit decisions. We could see improved tender scores in bid processes. And sort of more suppliers sort of signing up to your code, and sort of just sort of that sort of general external attractiveness. Next, Stephen.
Sorry, it's just sticking.
Delay, and that's okay. I'll keep talking through. The next slide is looking at practical steps. So things that we can look at over the next. You might look at over a sort of a 3-4 month period, maybe 6 months, depending on the shape and size of your organisation. But ultimately here we're looking at things that are based on sort of understanding that ESG materiality, and sort of both from a sort of I guess a double materiality perspective, so impact and the sort of commercial and financial side to it, and where the overlaps are in that. Building improvement plans, so we know where we're heading, in terms of those gaps, how we sort of move from where we are to where we want and need to be. Producing that investor focused sort of document, sort of 1-2 pager that clearly demonstrates that maturity, where you're at, where you're heading, the identified sort of obstacles and challenges, and working through that plan with sort of creation, with sort of actions, with behaviour change, with sort of updated policies, procedures, controls, etc. These actions are all sort of going to drive you towards some of the stepping stones that together and with a strategy over the top will start to sort of come together and provide that real benefit to you in the whole process, and ultimately in any kind of investor-led process. The next one. Thank you very much. We've covered quite a few things at a bit of speed here, and obviously this is quite a sizable topic to go through. So just sort of to recap on just some of those bits. So we need to remember that ESG really needs to be embedded and not sat separately, as right from from strategy and then right through to sort of to delivery and execution and on to communication. We need to sort of put in place those activities that will make data collection and evidence more accurate, easier. So that in future we've got reliable data, and it's and we're constantly improving what we're collecting and how that's being quantified and measured. We need to be linking outcomes to actions, not only because it makes for a great story when we're communicating in an investment process or to other stakeholders, but it provides weight and priority to ESG instead of it just being considered as a cost. Understanding what the output from a particular action and truly understanding that and quantifying that will raise its priority and its importance in the organisation. Making sure you've got the correct disclosures and resources for each audience, as we touched on earlier. Again, this is investor led, but similarly for how we're communicating this internally to employees or out to customers or suppliers. And I think really importantly, remembering that a well considered and executed ESG strategy, it's not just important for that investment process, but it just forms a genuinely valuable part of all organisations that will deliver efficiency. It will reduce risk. It will increase or should increase growth of rate, differentiation from your other competitors, and that's all alongside the fact that the whole idea is that we're reducing the impact on the environment and those people that are around your business and its supply chain. I think there's just a couple of quotes, Stephen, just to follow, just to sort of
given the time, Adam, should we do the last few, and then it leaves us just with a bit of time for questions, I think. We've got a case study in here which I won't go through, but does show some of the sort of high levels of return investment. And there's a lot more on the website as well. If you are looking for any sort of specific case studies, by all means, get in touch. We've got a QR code at the end there, and we can help you with some of those. I think in terms of that next steps and things you can do, the good news is that we do have sort of solutions ready built that covers everything you need to get your ESG strategy investment ready. Our solutions help you put in place that credible ESG strategy that delivers all the elements you need to successfully navigate the investment process whilst delivering business benefit and ultimately enterprise value as well. what we provide enables you to fully meet the requirements of investors as well, which can be quite varied and diverse. And they really value that transparent reporting. They value third-party validation of that, so that you haven't just done it yourself. And this helps you to understand and mitigate risks, and embedding ESG into your board practice to demonstrate that you're a well-run business, and importantly, enabling you to articulate this in the investment process as well, and how it all adds value to your business and your organization. The solution we provide has got 7 core modules. Given the time, I'm not going to run through these in detail, but it helps you get a sort of clear understanding really of sort of where you are, and to develop that action plan out. So that's the first bit, and we align that against any of the frameworks that could be relevant to you and your organization. We get you that data pack that you need as well, and so that you've got all the kind of reporting that you need ready to just drop into the data vault for the investment process. We can then support you with some of that policy and governance piece, and help you get all your policies aligned to recognized standards and formatted for that investor due diligence process, and then give you that long-term strategy, because this isn't just about kind of looking back on things and retrospectively reporting. You really want a forward-facing strategy that demonstrates how it delivers future value, not just compliance. It's how you're going to get there and to deliver that benefit. And that's the really important thing from investors. It's why you're doing this, what benefit do you see from it? We'll help you deliver that in a means that's sort of ready to go, and you can present directly to your investors. And we'll do that against investor grade reporting standards, so be it ISSB, SASB, etc. Things like B Corp, making sure that it can align to any of those frameworks that are important to you or your investment community. And finally, we'll help you get aligned internally as well, so we can support you with the necessary training, so you can articulate this at a board level to your investors, and get your team set up internally to deliver this as well. So modules that you can either purchase individually or collectively, and we can help you put that strategy together. So if you are thinking of doing this, if you want to look at some sort of strategies, the next steps, we either run collective workshops, which you can join, and they run at our place in Manchester, or we can come to you and deliver one of the ESG strategy accelerators, which is on the left. And that would include sort of the relevant stakeholders from your team, and helping you put together a suitable ESG strategy and work out how you delivered it from there. Next steps, if you do want to book in with Adam and I, or either of us individually, you can check on the QR code there, and just book in at a time to suit yourself. And that leaves us probably just a few seconds. I think we've overrun slightly, so apologies for that, for any questions. So if you do have a question, please just drop it in the chat. We've got one coming in from Georgina, which is, how detailed does our ESG strategy need to be before speaking to investors? I think what you're probably seeing as we've gone through some of the requirements there at the end, there is a lot of information that's expected. And I think investors would be looking to see that was something embedded in your organization. So it does take time. It's not something you can just get to quickly overnight. I think if you haven't done anything, doing something's better than nothing. If you are sort of already in that, or just about to start that investment process, but it is something we would say to be giving yourself sufficient runway on. So, looking ahead to 1 or 2 years and thinking about investment in the future as a long-term thing, it's starting to put those building blocks in place now, because there is quite a lot of work to do. And I think investors are expecting to see quite a lot of information within that sort of due diligence pack in the process as well, and seeing that's embedded in the organization, not that you've just gone, hey, we've got some historic reporting and I can tell you what things like board remuneration or carbon emissions or something. They really want to see that strategy rather than just the reported metrics. Doesn't look like there's any more questions, so unless there's anything else coming in, I think we'll sort of wrap it up there. Just to go back to the QR code, so if you did want to book in, it's there. We'll be sharing details of this quite quickly, and pass out the recording as well as the slides. As I say, if anybody's got any further questions, if they do want to speak to us, by all means, book in with Adam and I. Happy to have a chat. And hope you all enjoy the rest of your day. If you have enjoyed today, or you've got any questions about things like environmental product disclosures, life cycle assessment, which Adam touched on as well, trying to understand the emissions of your carbon footprint, we've got our first webinar of the new year on the 14th of January, and that's going to be with Michael and Adam, and they're going to be talking you through everything to do with demystifying product carbon footprint and how to make more sustainable decisions on your product. So thanks for attending today. Thanks for your time, and look forward to seeing you again in the future.